Good evening, everyone. It is March 6th, 2016, Sunday. This is Brandon. I'd like to do some coverage on the S&P 500. So the futures market is trading. The S&P ES futures down two handles currently, sitting at 1993. We got some size at 95 that I'm watching, and I'm watching this closing candle to see if it can close at the high of the candle to create a hanging man doji, which could potentially lead to a reversal lower. Actually, I do have a mixed feel on this tape going into this week, and let me discuss some of the reasons. So the first thing is that we have a light economic calendar this week. That's something to keep into consideration. You know, which it could perhaps mean lighter volume, and when the volume is lighter, well, you could have strong price movements on light volume. That actually happens quite often, but choppy sideways behavior, um, given that we are now in a trading range, an overbought trading range, I should add. So anyway, let's go into the chart. We have clearly what I've been talking about, this head and shoulders pattern formation, that perhaps could be negated. We are essentially trading up at the right shoulder peak where it should be if this is going to be a weekly head and shoulders that's going to succeed. Now, the possibility of the pattern not succeeding is pretty good as well, because of the strong volume, reversal volume that took place. We had a lot of volume here at the head and shoulders neckline, which could potentially negate the pattern. So we've had 3 weeks of upswing. I mean, major move, essentially 200 points off the lows. It was big. It was big. I mean, I traded some of it. I wish I caught the whole thing. It's a lot easier in hindsight to say, oh wow, if I just bought at the lows and turned my computer off for a couple of weeks, then that would have just been fantastic. Well, it would have been, but most people scale out. It depends on your trading style. I'm short-term swing, so I get in and out. I trade, the ups, the downs. But I am going to try to start trading more swing positions if I get the opportunity to do so. So we'll see. But anyway, I have a volatility band buy signal, the first one of the year. On the weekly chart, we have a gap up here at 204, 203.87. I'm not going to just assume that the market's going to go in a straight line there, but it very well could, given the momentum and the strength of this reversal. There's many analysts calling for 2020, 2011, just sitting around at 2000. We'll see, but essentially we closed above the 50 EMA on the weekly, which is at 223 cents. 50 EMA on the weekly. So that kind of favors the bulls. We have an ADX read of 32.3 on the weekly. That is indicative of a strong trend. It's not too strong to qualify for, maybe a potential breakage in the trend, but it is certainly indicative of a trend to the upside. I mean, I would say more of a macro term, we do have a bear channel. This downward sloping channel here is primary. It's primary, and this reversal price action is a function of that primary trend channel. So you can make the case that this is a counter trend trade and swing up that could tag the resistance up here, which is there's going to be a ton of supply here. I mean, if price action gets up here over the next couple of weeks, maybe even this week, but I doubt it because of the very little economic activity. That's why it's important that we follow Europe and the European calendar. So go on to investing.com, check out the app, check out the economic calendar for tomorrow. You can also go to my economic calendar under the resources section of my site. So it is possible that that we do trade back up to here at this descending trend line resistance, which would be met with, in my opinion, many sellers, given that the weekly frames would now be overbought. But it's also naive to think that just because it's overbought, the market is just going to immediately fall over, and it's going to, we're coming right back down to the lows and revisiting the mid to low 180s. I mean, I did see some put flow in the March 24 put strike. I think what strike was it? The 187s maybe. I gotta double check that, but there could be a hedge. It could be a speculation bet. I don't know, but um, as the daily, the weekly, and the closer term frames get overbought, there's more reason to believe that momentum could finally reach its exhaustion point and reverse and come back down. So we could look for a short, but I'm not saying that I'm just going to jump in short because, for example, look what happened last year in this October rally where essentially we just rallied for weeks into November. Then we hit the wall. We could call this a secular trend line resistance. Hit the wall, banged against it. These are great day trades. Excellent activity that you can make good money in if you can trade a sideways market. But what the point of the point is that you get these moves and then you got to close out or you got to reverse because now we create, especially here in this realm here, you could see this tight channel that was established, and while the stochastics was embedded overbought for many weeks, and it took a while. It took till December when we had, what was this? The Santa Claus fake out rally. This was December 11th, 2015, where the selling pressure started, but it didn't really happen until January. So what I'm saying is that if I were to guess, I'm going to say the market is probably headed up here, and the momentum can push to fill this gap. I mean, this is the January barometer. It's the barometer is the first 5 days of January, and it's a major indication for the outlook of the year. And when we had the most bearish January barometer in history ever. I mean, it's crazy. So, it's kind of indicative of what could be a bearish market, perhaps in the fourth quarter of the year. So we don't know that yet, but we just need to trade based on the data and the historical evidence that is in front of us now. So, based on that, on a weekly frame, just taking a look at the fact that we're not too overbought. I mean, I use a 5-period RSI. We're at 66 on the weekly. It doesn't mean that the market's coming down. I think I did mention in chat that I think that we could get a tradable recycle lower into the night and then potentially a snap back up into the the early hours when Europe starts trading, into the cash open. And yeah, so tomorrow morning, I wouldn't be surprised if we see a gap up. I also wouldn't be surprised if we see a gap down. Monday is typically a gap day, so it's something to keep into consideration. But I want to zoom in and just take a look at the daily on the SPY. I mean, look at this sharp just trend. This is the definition of a trend in terms of price action off the lows. But since what's interesting, when guys that use technical indicators, price action volume over it supersedes everything, in my opinion. Patterns and increasing volume is so much bigger than indicators, but indicators are a big deal, and I do use them, and you can see on my chart I have a lot of them. So I just want to say that, let me just go on a cleaner chart. I'm just going to use this chart. It's fine. I am going to say that we are pretty overbought on the daily. I mean, the stochastics has been embedded overbought for weeks now, and and the price action is just drifting higher. So if when I look at the ADX and I see that we have an ADX of 15.2, that's indicative of a trading range because it's below 25. But you could see we have a short-term trend, so that clearly doesn't add up with the big picture. Well, that's because we had a longer and bigger picture downtrend, which essentially, it broke. It broke over here, and then we just started kind of pushing higher. That Thursday. It's unfortunate I took off that Thursday and that Friday, where we had that reversal on that Thursday. I mentioned how reversals and market bottoms typically occur on Thursdays. So it was just very coincidental that it happened to be on that Thursday before I had spoken about it before. What I do see here is a potential inverse inverted head and shoulders. You got a head here, a left shoulder peak, right shoulder peak that never really happened yet, and that's a little too low, but maybe up here, since it's kind of like a tilted sideways slanted variation of an inverted head and shoulders. This is showing 192, but I could see based on the daily frame, we have a cluster of moving averages here. The 10, I like using the 10 and the 20. They're very key on the daily. We got the 10 at 196.50, and we got the 20 at 194.38. And the 200 on my frame. Now, remember, my moving averages are set as a function of other moving averages. So my moving average price using exponential moving averages might not match up with yours. But I do have my 200 EMA at, excuse me, I have to sneeze. Excuse me. I have my 200 EMA at 214 cents. So we closed above all moving averages on the SPY on the daily frame, which is actually very bullish. But it is overbought nonetheless. So, I'm assuming there should be some pullback activity, which would, in my opinion, be a buy the dip. 15 minutes oversold. The 4-hour embedded overbought. I mean, it's just crazy overbought. Money flow is pointing higher. Everything looks just bullish. We're closed above all of the moving averages on increasing volume. Like the market was really strong. It didn't appear to be strong. This can be somewhat confusing because the market wasn't actually strong on Friday. It's showing that there's buyers underneath and the block volume is holding, and it's not weak. It's not reversing like it did, like the activity we saw in January. We would have like sharp reversals all the time. It's just not happening. So I'm not saying it won't happen. I like to look at the McClellan oscillator. According to the McClellan indication on the in his newsletter, the guy talks about being bearish on the S&P, and he would be very bearish on the S&P if it closes red. So I mean, that's not really enough information, but it's good to know what other professionals are doing. But you could see when I zoom into a line graph that we do have an interesting inverted head and shoulders, and we did close above the neckline. So if the measure rule holds true, we would essentially the peak of the head to the neckline would essentially be the measured move up, which is about 6% higher from here. And we already got a portion of the move. We already got 3%. So essentially it would be another, if the neckline's over here at 195, it could be another 5 points higher. So 205 would be a clear measurement. Whether it happens or not, I think it's kind of a level to keep your eye on in terms of when it's time to potentially start taking some shorts. But above 200, I think that it's bullish. I mean, it's hard to be bearish. Scalping puts, scalping the ES short, doing that kind of stuff, is all good. It's all fair game. We can make money doing that stuff too. But I think that like the swing short is not the play just yet, but we are getting early signals that the market is getting somewhat toppy. You can see the McClellan oscillator against a Keltner channel on the daily frame, basically tapping the resistance. It did this here. Last time it did it was in October of 2015, and essentially this is what right here is where like the world got bearish. And what happened? We had a tiny dip right here, and then boom, we with little dips, and you just keep drifting higher. So what that could imply in this scenario is that we could get the little dip, a little dip back here, perhaps, maybe even a dip back here, 96, 196, 195s. I'm not sure. It's just, but I could just say that we are drifting up. So if we're going to have some sort of, trend line support, you would assume that it would be somewhere in this realm, 197s to perhaps 195. But under 200, it could give reason why a short would make sense. But that short, in my opinion, I could be wrong, because I think the market may be set up for a potential reversal and fast, sharp, down elevator, if you will. But I think it'll be short-lived, and I think it'll get bought back up, because I'm essentially like, if this pattern, this inverted head and shoulders, if it fails the initial attempt and breaks down to the neckline, I would assume that the 187, or well, it's interesting because there was a lot of put flow in the 187s, I believe, and that would essentially come back down here to complete the pattern, which it prematurely broke out to the upside. It would make sense considering how overbought we are, and on the McClellan, also on the stochastics and other indicators. It can potentially warrant a move lower back down to here. And again, we do have some evidence with the put flow in the the March contracts, which could just support the thesis of lower prices. We do have some bears in the room, that are positioned in UVXY, that are perhaps short the ES, and also long SPY puts. I'm not sure, but I just want to make some comments on what I'm seeing with regard to buyers being underneath, and that perhaps the down waves are not the most exciting because they get bought back up. I mean, when I was trying to short last week, it was really difficult. I had some trouble. So guys, this is a good time, especially when it could be a low volume week. It is a good time to kind of just have that conversation with your broker dealer, accountant, and or your attorney, and kind of discuss whether it makes sense to be long or short here. While the market is overbought, usually what I like to do is wait for it to have its extension push higher, perhaps trade the extension, push higher, and buy the dip if there's going to be a dip. Right now, the futures are down almost 4 handles, 3.5 handles. Nothing crazy, but I do have indications showing me that it's possible. It's possible we could get a reversal. It did not happen on this occasion. In fact, using this indicator just to show you how the McClellan oscillator is not a perfect indicator, you can see that when we peaked out at this ultimate peak, I mean, this was a crazy high peak, you would think that the market was going to revert lower, but this is why you can't use your McClellan oscillator as your sole indicator. It needs to be a function of a group of indicators that can lead you to a thesis and whatnot. So basically what happened here, the price action, it had like a very minor peak, and it dipped, and then it rallied, and then it dipped, and it rallied, and it dipped, and it rallied. And this was a trend. I mean, this is a trend off the lows, just similar to this. So if history repeats itself, this trend should extend to this trend line resistance and overhead supply. And if history repeats itself, this McClellan oscillator is going to come back in. The dips are going to be pretty minor, and they're going to get met with, fierce buying. That's my interpretation until otherwise specified. And how do I specify it? By above average volume with price action that is showing a reversal. You got to see hard, like when you have a reversal off the lows, what do we look for? We look for high volume at the lows to potentially reverse. You're short, you look to reverse. And the same goes with the top. If you have high volumes at peaks versus a high volume at a trough, the same rules apply, just opposite strategies. So if I start seeing crazy volume up here at a peak, I mean, if I'm long, I'm looking to close out and potentially reverse. So I just want to be clear on that. So what I'm looking for this week is worst case scenario, a retest of 187. That would be a big drop, and I'd want to trade that drop if that's going to happen. I think that would be a buy there. That would be a really interesting speculative spot to get long, and essentially, come back down here and have this head and shoulders, inverted head and shoulders, and essentially trade it back up to the neckline, which would be about 197. But that would be the worst case scenario, and that would be a pathway to trade it, so one trip down and then a trip up. That would be one way to trade it. Another way to trade it perhaps would be just going long. I mean, it's really overbought, so it's not really the best strategy. I'd rather wait for it to come back and retest the neckline. That would be our throwback, and perhaps that's enough retracement to work off overbought territory and give the price action the opportunity to find a pocket of demand, because right now we're not seeing much of a pocket of supply. And if the price action is not being met with supply, then essentially it's just going to drift higher, in the direction of the trend. And right now the short-term trend happens to be up. So, I think I covered all points there. So it's my strategy would be to buy the dip, but I potentially would be looking to trade the dip. Right now the market is flat. It's illiquid. I'm not really seeing anything on the Super Dom that is getting me excited. I see a little volume, some tags down at 1990. Maybe I'll look to jump in there. I know my good friend Charles is long in the chat room. I appreciate him posting his entry. Very nice. So we can welcome him to the crew. And he's only going to be here for a week, but coming in the fall, he'll be more active. So it'll be good to have another player that I know from back in the day. So that's about it. This is a 23-minute video. It's a little long-winded, but I'm going to close it up here. I hope everyone had an excellent weekend, very restful. I look forward to a very profitable week in the stock market. I think that we can do well this week, but keep in mind that it is going to most likely be a quiet week due to the economic calendar and due to the fact that the market got so extended. So if it's going to be low volume, I wouldn't be surprised if it just chops around in a sideways range, 3 to 5 point range, and that'll be enough for us to trade. We'll be able to trade through it, so we'll do what we have to do, but it just might not be the most action-packed. So let's let, we'll put time in our favor and let it unravel. So anyway, have a great night. I'm going to post this video, and I'll meet you guys in the chat.